Hey, welcome everybody to the 40 Finance channel. My name's Jeff Beers. Today we're going to look at sector valuations. Just a quick video. I was going to do this one live, but sort of ran out of time. In my opinion, the market is a little inflated right now. I'm expecting some sort of pullback maybe in the next couple months. Who knows how long it'll take. But let's take a look at the valuations by sector and industry, because I think that is a nice place to start. If you're looking for value, breaking it up by sector and industry, sometimes you can start there, dig deep into stocks and see if there's any overlooked names that other people aren't thinking about. All right, so for this, we're going to use FinViz website. This is a free website. They do offer some plans, but I know that I log in. There's some version, it's a free version, but if you log in, you see a little bit more information, and that's what I'm doing here. So we're in groups, gonna look by sector. We're gonna go to price to earnings for this one, which stacks pretty nicely. You get the PE, the forward PE, and the PEG ratio. And you can see that I've already sorted this from smallest to largest. And that's not always the best way to think about it, but let's just start there. You've got financial, basic materials, utilities, consumer defensive, energy, industrials, healthcare, communication, cyclical, technology, and real estate. Now, the one thing to keep in mind is different sectors have different sort of baseline PE ratios, right? So while financial at 1472 seems that it would be, significantly cheaper than technology at 4037, those sectors perform at much different levels, and financials, to be honest with you, they can be in the single digits sometimes. All right, now let's take a look. If we go by forward PE, the smallest forward PE, and the big thing you want to see with forward PE, in my opinion, is not only obviously a low number like energy here at 1043, but you want to see the gap between trailing PE and forward PE getting wider from a positive sense. So you want to see a declining trend between trailing and forward. I think we have that in all cases. Well, you see here on financial, this is interesting. Trailing 12 months, 1472, but the forward is 1522. So the intuition there suggests that the value for financial would actually go down, or the cost per earnings would go up. Just by looking at these broad numbers. Now I'm trying to figure out which one, just by eyeballing this, has the biggest gap. Here you got healthcare 35 to 19. That's a spread of 16. Utilities has a spread of 3. 7 for consumer defensive. 15 for industrials, so that could be interesting. Communication services 13. Cyclical, you go from 37 to 25, that's a spread of 12. Technology also at 12, and then real estate at 2. Next, we'll take a look here at PEG ratio. The closer to 1 on this, the better. You got financials at 1.2. And all the way at the bottom is real estate at 368. So the growth prospects in terms of stock prices are not nearly as good in real estate as they are for financials. Consumer cyclical and communication services look like they're the best buy from a PEG standpoint. Technology at 215, probably not that bad for technology, to be honest with you, when you think of the price premium that typically comes with that. All right, now let's look at EPS growth. The EPS growth for the past 5 years that had the highest percentage, consumer cyclical, which is interesting. I think we would all close our eyes and pick technology here, but it's actually consumer cyclical, which includes things such as travel, restaurants, Disney, things like that would be in consumer cyclical. So very interesting there. Technology, 19%. Then if we compare that to the next 5 years, interestingly enough, if I can get it to sort here, consumer cyclical is projected from an EPS standpoint to be, the highest profit growth. Communication services coming in second, and technology actually losing a step over the next 5 years. Again, this is a projection versus the last 5 years. So interesting there. As far as the spread and who's making the biggest jumps, let me just kind of eyeball this. Looks like industrials has a lot of potential, going from 325 up to 1462. Financials, +5 there. Basic materials, likely down. Healthcare, short spread. Real estate, +5. Consumer defensive, +5. Energy making a bounce back, and utilities also making a bounce back. All right, let's go one step deeper here and get down into the industries. So this is a pretty big list. I don't even know if it'll all fit on here. Let's see how they're doing it. So they got 144 industries. And if we take, let's just start with PEG ratio, just as a starting point. Mortgage finance, which it's hard to really conclude what is included in there, but there is opportunity at this price. They were saying for mortgage specific companies, that would be different than real estates, which would be, sort of on the back end of the REIT sector. Financial conglomerates, insurance, real estate, development, residential construction, steel. So it's interesting view from the PEG ratio. Luxury goods also trading under 1, which is interesting. Now from a forward PE standpoint, and this is going from low to high, you've got life insurance, marine shipping, residential construction, steel, insurance, oil, gas, REITs, utilities, medical distribution, pharmaceuticals. So those right now, those particular industries have the lowest forward PE. Now again, some of these industries, I'll tell you right off the bat that insurance, shipping, steel, what else we got? Oil and gas, REITs. In general, those industries have low PEs to start with. So you can kind of see, like on life insurance, today's PE is just under 10. And while it's good that the forward PE is dipping a little bit, you have to factor in some other things like PEG ratio to really think about this in the full light. And really this mortgage finance stands out the most to me, except for the fact on the negative side, you're going from a low PE to a higher PE. PEG ratio, though, very strong at today's prices. And if we scroll over to EPS, the last 5 years have been -3%, and the next 5 years look at +40. So for me personally, I would say that's good news for Rocket Mortgage, which was one of my holdings, but I'm sure that there is dozens of others you could play off of as well. All right, now within industries, you can even go deeper than that. So I'm in communication services, and if we get a little bit deeper and we try to look for where is the value within communication services, and we were going to do that on a forward PE basis, telecom, advertising agencies, which makes a lot of sense since I'm sure that advertising took a hit on people's budgets. You go from a 41 on the trailing PE to a 14. PEG ratio not so hot at all at a 5. And then looking at EPS, you do have positive EPS growth. Now on the big side of EPS growth, let's see how entertainment, current PE is 50, forward of 26, PEG ratio closer to 1, so that kind of checks off a box. EPS in the past 5 years was 21%, and the next 5 years is 35%. So there could be something there. And if you click on that little subsector, what do we have? We have all the things you would relate to entertainment, and it could be influenced here by AMC. Although the metrics we were looking at were fundamental value metrics, so AMC's, I would say, awkward price maybe doesn't come into play here. What do we have? Charter Communications, Comcast is in here, Color Star Technology, the Discovery channels, Dish, Disney's here. So it might be worth going through some of these stocks and see what exactly you can find out. So you start at the sector, right? Then you can go down to the grouping of industries, which gives you, 144 industries to look at. And if we wanted to sort by EPS next 5 years, and we talked a little bit about mortgage and finance. Let's see if my Rocket stock is in here. It is, so it is in that grouping, but there could be some value to be had here in this mortgage finance subgroup because they're suggesting that there's a lot of potential for the future. All right, guys, so that's just another way to look at some high-level stock information, maybe get your brain going into finding your next stock that you want to invest in. Hope it was helpful. As I mentioned, anytime you're doing broad sector searches, you have to keep in mind the relevancy of the group you're looking at. Not everything trades at technology type valuations, so make sure you understand that a 10 PE, for example, for like NVIDIA would be absolutely outstanding, but if you threw it on a local or regional bank, then it starts to become just more common, if you will. All right, investors, let me know if you got any ideas from the sector search that we just did. Leave them in the comments below. Give the video a like, subscribe to the channel. Thank you very much for your support.